Okay. So most of you know me here, and if I didn't have a background screen at the moment, you'd actually see a pile of boxes for my e-com store. They absolutely fill my living room. So today we're speaking about accounting and AI. So you know who I am, you know what I'm about, and basically I'm talking about how AI is affecting accounting in the modern day. So I've got 10 years experience in the accounting industry. I started when I was 17 years old, straight after school. I worked in a firm for about 6 years before I decided to go out on my own. Then I, in the last year, decided to become director of Bistec MH. Obviously, started with Pabudu and Gathani. I'm also a treasurer of various not-for-profit clubs and involved in things like the Queensland Holocaust Museum, involved in political societies, university clubs, you name it, I'm there. And also run the e-com shops. Now, what is accounting? So accounting for me is basically acting like a translator for your clients. So accounting is all based around taking real data and translating that into actual real life information people can make business decisions about. So I became an accountant really when I was 12 years old, I like to say. When I was young, my dad's a builder and my mum's a beauty therapist. So she had a beauty salon and my dad had a building company. And I can always remember as a 12-year-old kid coming into the office at home and hearing them fight, basically, about bookkeeping. And I can always remember hearing my mum yell out at my dad, where's that receipt? Where's that piece of information? Why doesn't my bank account reconcile? So at that very young, tender age, I was like, you know what? I can step up here. I'm decent in maths at school. And that's where my accounting began, on the old mild Premiere file. And I decided to help out with just entering bank reconciliations and support their business and actually work with their accountant at the time. So that went on for a number of years through school. And so I always had that natural knack for accounting because I was used to it. And somewhere along the lines, I decided, you know what? This is going to be a great career for me. I'm used to it. I can do it. I'm going to do that. So going from there, with my parents being small business owners, I was constantly interested in terms of accounting, in making accounting accessible for small business owners. I say here, as an accountant, you're effectively a translator. I can recall sitting with my parents and them looking at their financial statements and not understanding what was going on. And that's pretty normal for me to look at that and go, okay, so the normal business owner doesn't quite understand what's fully going on in their business. Their accountant is not effectively explaining things to them correctly. And that's what I built my career about. Or like I've got clients from, $50,000 turnover to $15-20 million turnover. So a wide range of clientele. And you can see, like, even from the smallest business owner to the biggest business owners, they still have trouble looking at accounting and understanding it. Their whole thing is they see and understand what's happening within their business. They understand that in their minds, but they don't understand the figures behind it. So when they make the decisions, they don't actually make decisions with the financial statements in mind. They make decisions about what feels good for them, what they think will work, and then they don't understand that they're losing money effectively. Because business owners don't operate off P&Ls like accountants do. They operate on what cash is in the bank. So if they've got cash in the bank, they're usually feeling like they're doing good. So based off that, I've got here the most useful skills in accounting is learning what the right question is and asking it, and thinking about the numbers about what is really happening within a business. So what I mean by that is a good example is when I was first introduced in accounting, probably my second year as an accountant. I inherited a client, a cafe client, and I could see that they'd made a loss of like I think it was about $20,000 a year for like 3 or 4 years. And I was sitting there and I was looking at this cafe and it's losing money. The owners aren't drawing a wage. And I'm like, why would you be in business if you're losing money? It just didn't make sense to me. And I went to my senior accountant and I was like, I don't get it. Why work so hard if you're losing money? So we eventually asked the client and we were like, can we have your sales reports? Can we understand what's going on in the business? And when we got their POS system sales reports, the situation was slightly different to what we'd been recording for the last few years. And I was looking there as that junior accountant, and I was going, they're earning like $120,000 worth of cash a year. They're making really good money. They're just not reporting it. And that's the thing. You look at a business and you go, oh, this cafe is losing $20,000 a year for 5 years. Why is that? Something's not making sense. No one would put them through this effort. No one would lose money willingly. So accounting is all about learning to ask the right questions and then asking it, confirming it, thinking about your suspicions. You're almost like a detective. And then when I say you're a translator, it's working out. A lot of clients ask me, why am I losing money? Or how can I make more money? And they're in the business full-time, 38 hours a week, or most of them 40, 50, 60 hours a week. And they don't understand why they're losing money. So it's our jobs as accountants to go, this is what we need to do to work out and translate from their books to themselves as individuals why they're losing money, why it's not working for them. And I go on there with thinking about the numbers, about what's really happening. So I've included a screenshot here about accountants. What people think we do. Yes, I say we're translators. I say we're almost detectives. And society views us as very different. They view us as boring. They view us as like not interesting. We're not having fun. And that's probably because we're stressed because we've got so much work to do. But in reality, we're absolutely vital. And you can see here at the bottom, what we actually do is just handle Excel spreadsheets. I'd like to do what my friends think I do, up at the top there. But yeah, accountants are vital to business. They go hand in hand, and business owners, CEOs, rely on accountants to translate the financial figures to them. That's what we need. That's what we do. We're there to advise. And coming back to AI a little bit, AI is helping us advise. I'm going to go into that in more detail in the future. But a big part of this presentation is thinking about what we used to do as accountants and what we're doing now, because we've started to change a lot from like even when I started my accounting career, but even before then, accounting was a very menial role in a lot of aspects. A lot of accounts are going through and trawling through data, making fixes, doing adjustments, all these kind of things. And in reality, accounting's changed now. Accounting is more focused on advisory. And that's a separate discussion. But advisory has become the forefront of accounting. And AI is all mixed into that in helping us make our job easier. So
Isaac, you're muted, Isaac.
excellent. Can you hear me now?
Yes.
Excellent. What was it? Did we just miss the last minute? So
Yes, the last few ones.
okay. But yeah, so modern accounting was started by Lucio, a Venetian merchant, back in 1492. He began double entry bookkeeping, and it was the beginning of the debits and credit system as we know it today. Balancing your books. It started 500 years ago. Accountants have been doing that. And accountants of the past have been doing all that manual entry. And like it started in the 1400s and it's continued to now, where the majority of accountants are focused on doing that, balancing the books, making sure their bank recs not out by $3, making sure that their accounts are all lining up, which is a great work. But accounting, what's happening in the future is we're moving away from that. Accounting and AI is changing that. Just over the last 15 years, particularly over the last 10 years, you think about how things have changed. Now, I started talking about working with my parents when I first started, 12 years old. I remember doing the old mile bank recs, and I don't know what I was doing wrong looking back now, but every time I did a bank rec, I was out. I was out by like $50 or something. And I'd spend ages I'd have my bank statements printed out here, and I'd be looking at the mile file, and I'd be double checking, and I'd be ticking and flicking and making sure what's different. And now, as everyone probably knows, in cloud accounting, bank accounts are directly linked to your Westpac or Commonwealth bank accounts. So you've got bank feeds set up. It's instantaneous. It's so much easier. You're not doing bank recs in general. You're just making sure what is in the bank account. You're ticking and flicking automatically through the system. So technology as a whole has completely changed the accounting game. Instead of looking for receipts like I did back then, we got receipt bank. We've got tons of technologies that do this. Receipt bank's just an example. But you've got tons of technologies where you can just pull up your iPhone, pull out your smart device, take a photo, and then boom, your receipt, your invoice is within your accounting file. It's that easy. So it's completely changed. And I say compared to the old miles and reckons of the noughties, the quality of accounting has improved in the last 15 years because it's easier. Because it's easier, it's accessible for more people. Less people make mistakes, and it's easier to fix mistakes. Like if even modern accountants, it's not like they've gotten better. It's they're using easier systems. You put a modern accountant on a old noughties file, they're going to take just as long as people did back then. So it's a big change in the industry. over the last 15 years with the rise of the new technologies, what you can do, what the ability is in the industry to produce reports. Like it also means you're much more efficient. Like jobs that used to take a day and a half, 10 years ago is taking us 20 minutes, half an hour. I know with clients, when I move them to new systems, it's payroll. Some clients, it was taking them a day and a half to do payroll. And on newer accounting systems, it's taking them about 40 minutes to an hour. So you can see over the last few years with technology changing, it's making everyone more efficient. I muted myself again. Oh, goodness.
No, Isaac.
Okay. Excellent. Okay. Look at this. Accounting 15 years ago. This is what I started on. And accounting now. Like you don't even need to be an accountant to tell which one's easier. Like they've made accounting now so much easier, so much more accessible. You can pretty much tell based on this Xero file here on the right. And it doesn't have to be Xero. I use Xero as a good example because I love it. But even the MYOBs on the left here, they've got MYOB cloud-based files, which are very good. You've got QuickBooks online files. You've got Power BI. You've got softwares for bigger entities as well that are more adapted, and they're fantastic, and they're cloud-based, and they look like this, not like the old one. Like they've turned accounting into something that you can see how you'd get the stereotype of being boring and struggling when you're looking at this all day compared to this. It's such a big improvement over the last few years in the accounting industry. So I mentioned business owners before, and I use my mum and dad as a good example, a few others. But business owners aren't making good decisions with their finances primarily because they usually don't understand it. A lot of business owners aren't reviewing their own books. And I mentioned before, they're making financial decisions without knowing their impacts. Most of the time, they don't want to know what their books are doing. Like it's such a daunting subject to them. It's daunting because it's historically always been daunting. If you've been in business for 20, 30 years, you know what accounting's like. And now we're going in the last 5, 10 years going, it's easier, it's better. We'll give you spreadsheets, we'll give you charts. And they don't want to see it. They don't want to deal with it. They just want to run their business. And it's the job of the accountant to teach them and guide them on their journey. I've got a picture there. When I meet clients, that's actually some of the looks I get. And just holding their head. I've got one client in particular. I meet his wife because he disappears. He's a farmer. He runs off to his property. So business owners aren't very keen to meet accountants because, once again, they don't understand it. You're also often delivering bad news. You're telling them how much tax they've got to pay. But in fact, we should be advising them on how to minimize their tax as well as what's going on within their business. Like such a key area. Next. So bringing this back to AI, where is AI now in accounting? Now I've spoken quite a bit about business owners, where they are, how I started, where I get my inspiration from, why I became an accountant, dealing with my parents fighting. That's a big part of it. So the question is, where's AI now in accounting? Now, I've spoken earlier about technology, how it's become so much easier to do things. Like if you see here and just understand, in the past when I was doing that bank reconciliation, I had to manually double check every single line. Like in terms of AI now within the file, AI is learning every time you're doing a bank reconciliation what you've done before. They get access to all the data within the file, and then they're automatically suggesting what you should be doing next. So I'll give you a more detailed example. You might have bank fees in your bank account, $10 a month, for example, 12 months a year, first of the month, every month, $10, right? Previously, you'd be typing there, entering in the $10, clicking mark as reconciled, you beauty. And you do that manual task every single month without fail. Now it automatically can pop up on your bank feed. You click tick, done, completed. That's it. Because those softwares have seen you do that before. They've seen that you do that maybe 1-2 times, and they pop up the suggestion. You might have a bank fee with Westpac Bank, so they'll pop up Westpac Bank, $10, GST-free expenses. They're learning based on your actions. AI, and our previous speakers today mentioned they use data, and in this aspect, they're using data to look at your prior entries and then predicting your newest reconciliations. They're predicting what transactions should go where. They're doing lots of things. When you enter an invoice, for example, and send it out to a client, they can see it there, and then they can match it against it. It's an automatic process. Artificial intelligence has made accounting for the average person a lot easier. When you're a client and doing your books goes from entering in every single statement line, going from that to looking at a sheet and then just going through double checking and clicking OK, that's what your bookkeeping standards has become. So it's saved you so much time as a business owner in order to reconcile your books. So it's actually like improved business owners' lives, like incredibly, and accountants' lives. Well, it's easy for the business owners, it's good for us. I mentioned cash flow forecasting. I'm going to get into that a bit later. Transferring data, comparisons of data. It's there's so much software changes going on at the moment within the business that like it's incredible for small business owners, and firms, because whatever's good for businesses generally makes our lives faster and better as accountants. And here AI is everywhere in accounting, but the early adoption is happening in large volume menial tasks and analysis of large quantities of data. It is. So you're changing what we used to do. Like I mentioned before, back in the 1400s, when we were there with our double entry accounting and balancing the debits and credits, AI is picking up the slack. What they're doing is looking at that menial task and going, yep, you've imported the financial data, right? It's automatically categorizing based on the bank statement lines and what you've done before. So it's taking out a lot of that menial work that was the foundation of modern accounting back in the 1400s. It's doing that for us. So go on. Here it is. I say here, clicking the big blue OK. It just look at this. This is what accounting's become compared to the previous slide, the MILD file. It's it's an incredible piece of work. Granted, it's not without its drawbacks. Like, because it's become so easy and because they rely on data, obviously AI can make mistakes. They're only as good as, and um, it's been said by a previous speaker, it's only as good as the data that's come in. So if the data isn't good, and effectively AI might be predicting based on what you've been doing, but if you haven't done well, or if you're doing the wrong thing, it's going to do the wrong thing. It's learning from you, and it's learning from what type of data you put into it. So if you make mistakes, it's going to make mistakes. So as an accountant, even though it's beautifully and clear here, and in bank reconciliations, it's making our jobs a lot easier. AI is learning from its so-called master, which is the business owner. So it's a big thing to always check your bank reconciliations and check those things, and ensure in the sense that business owners aren't making the same mistake. Accountants, for example, aren't making the same mistakes because the AI tools available in bank reconciliations are following their lead, basically. Oh, this is incredible tools. I've got on the left here old cash flow forecasting. Like, I think this is in UK pounds, but everyone would probably see and know of cash flow forecasting, money in, money out. And you can have more complicated spreadsheets. I was at an accounting webinar. This is 2 weeks ago. I was in an accounting webinar. Granted, the webinar was about a year old, and they were talking about this new cash flow software they developed. And I was so interested, and I was like, wow, this is going to be incredible. And in it was just one gigantic Excel spreadsheet with different parts and moving balances, but it was just one big Excel spreadsheet. And as everyone would probably know, with Excel, if you make a mistake with formatting here, it could affect the whole thing. It's very hard. I love Excel. I'm an accountant. I feel like I married it. But there is something to be said that Excel is hard to manage. And particularly when you want to get more in-depth data out of it makes the spreadsheet more and more complicated. Like if you create this spreadsheet here, if you modify it, it's going to affect dozens of different formulas. Yeah, like if you want to make a chart out of it, you're probably going to have to change the formula with the chart. So Excel has its limitations. Like, you can't run a multi-million-dollar business just off Excel. It's just not. It's not user friendly enough to take you all the way, and it will have a lot of problems. If you look over here, you can see what new cash flow forecasting software is doing. And not only does it look extremely beautiful, which it does, but these connect directly to your accounting softwares. They connect directly to your Xero files, your Mark files, your QuickBooks file. And it doesn't have to be just this. Like, you got the Power BI, you got tons of different things. I think this one's Futurely, from recollection. But effectively, it feeds directly from your software. So you don't have to create this. It's feeded directly into your software, and then it produces this report. And it produces the forecast itself. And that's a really key indication, because in Excel, generally you're the one going through and going equals last year, maybe add inflation 5%, or using your brain. The new cash flow softwares are looking at seasonal trends based on what business is doing. So, like, a really good example of this, of these cash flow softwares, is they're focusing on seasonal trends, and also what type of data that's come into the file over the last 4 or 5 years or whatever data it has access to. If you're like for example, if you're a retail store and you're located at a beach town, obviously in Australia at Christmas time, your biggest months is November, December, Jan. Now these cash flow softwares powered by AI can trawl through all your data. You don't do anything. It trawls through all the last few years worth of data. They're looking at which months are achieving the sales, looking at that data and then producing forecasts based on that. So it knows that 9 months of the year, you're not actually doing much sales. And those last 3 months is where all your sales are at. I think one of the stats of bookshops, it's a crazy stat. Bookshops do like, I think about 60% of their sales in the last 2 months of the year around in Western countries, Christmas. So it's like November, December. That's where they do. You get 60% of their sales. And if you create an Excel spreadsheet, or if you're just doing equals times last year times 2%, or if you've got irregular years because of COVID, all those things, you've got to be constantly on the ball and watching, double checking the last few years worth of data, making sure everything's correct. Well, this cash flow software, the new ones based on AI, this has the ability to trawl through so much data over the last few years, can do that automatically, and they can make sure that all of that is done for you. It's like it's an incredible change because it makes making a business decision so much easier. Like granted, in the business game, you should know when your best months are at, but sometimes it might not be as easy as that. Like in labor hire businesses, there's certain periods of the year where, like certain months of the year, for example, where you have 3 pay cycles or 5 pay cycles in the same month, for example, if you're on weekly or fortnightly, and you might invoice once a month. So the months where you have more pay cycles, your cash flow is generally a lot tighter. Now you might get that in the end, you'll make it back, but that might be a lot of these labor hire companies charge 30 days end of month. So that means if you do the work in like April, then you probably won't get paid until the 30th of May, or sometimes 30th of June. So your pay is so far away from when you're invoicing and paying all your staff. So if you've got a 5-week month then and then a normal month and you're not actually getting paid for that, those extra pay cycles until 2 months later, obviously in Excel, you've got to be constantly watching and making sure and double checking. But you can see here on the left here, most of the time, you're not double checking the pay cycles. And maybe some accounts would be are good enough to make sure that they definitely are, but mistakes get made. And what this does effectively here is AI softwares, they can go through and they can see, based on the data, what you can produce and what kind of forecast they can make. And they go, oh, well, this month here has 5 pay cycles in it. It's going to be a tight cash flow month. And it can create a warning in the cash flow forecast. So it's very incredible and amazing for the future. So AI and transferring data. Now, this one's once again a game changer. Like back in the 90s and 90s, with accounting softwares, you were kind of, I think the best term's married to your software. Your software has, in a lot of cases, everything in it. It's got all your contact cards, it's got your projects, it's got every piece of information. So if you're a business and you've got all your information in one software, changing softwares it doesn't matter how small the business is a massive piece of work. because you're going to lose everything, or you have to spend a ton of time to recreate everything. Oh, and you see a lot of business owners back then, they would just start fresh, which means they'd lose all that data, they'd lose all that efficiently, and they'd kind of have to start again. Now, what's happening now, AI tools have been invented where it can go through and duplicate your data in old accounting softwares and recreate them in new accounting softwares or different accounting softwares. So you can effectively change accounting softwares without losing that efficiency. So that's a massive efficiency gain, as well as provide more options for business owners. So this AI tools, and I think I've got Jet Convert there, but there's many of them actually across the world, across many different countries, where they've got AI tools that just recreate data and set it up in the new system, and it doesn't cost a lot. That's the thing. There's a very low price point in regards to it. So when you're deciding which software to go with, you can change. You can make decisions about that. You can go, oh, you know what? This one's going to be more efficient, or this one's more in tune with my business. And it's quite easy to change from this software to this software because of these AI tools. So this, in effect, has created and 0, for example, is behind this one for the most part. I think that they subsidize $220 for every conversion, because people on older softwares want to move, and the reason why Xero and stuff like that subsidize it is because they're removing that price point and allowing people to go to the future, and also making tons of money from subscriptions. So it's a great deal for them. They lose $220 and then they get $600 a year in subscription fees. So it's a pretty big win. So once again, the AI in transferring data, it doesn't even have to be accounting file to accounting file. It's things like bank statements. It's things like invoices. It's like everything in regards to it. There's tools out there that can create information, convert to Excel, take it from Excel, put it into another system. It's everything. It's massive game change in the industry, and it saves accountants and business owners tons of times and gives us tons of choices. Comparing data software. This is another thing. When you're a business owner and you're running your normal business, and you're going, oh, well, one of our big questions that we get asked is, oh, how well do you think I'm doing? And the easiest way to tell how well you're doing is look at your opposition. If your opposition is all doing better than you, probably not doing too well. Doing better than all your opposition, probably doing pretty good. Now, what happens outside of a few things like the AI releases data on cafes where they give a gross profit margin, they go, oh, the average is doing 13%. And then, for example, you might go, oh, well, my cafe is doing 15%, so it's slightly above average. Your cafe might be in an area where everyone else in your area is doing 25%. So you can't compare to those broad AI things. So I think I think I've used this is the benchmarking software company. But there's tons of different companies out there. But effectively, there's companies where they sign up a bunch of business owners in industries. They trawl through all their data, collect their P&L balance sheet data, and then, for example, if you're, let's say, a builder in inner city Sydney, and you put your information through this software, you're not comparing against builders across the country, because if you're comparing against builders across the country, it's not going to be accurate. If you're comparing builders across the country, you're getting builders who are turning over $200,000 and builders turning over $30 million. Like, your data is just going to be, it's pretty useless to compare against such wide parameters. It's better than nothing, but it's pretty useless. Now, what these reporting softwares can do, they can trawl through all the people who've signed up on their systems and get averages based on exactly where you are in your business. So you can be as specific as looking at, I'm a single owner of a building company turning over around $800,000 a year in Sydney. That's how specific it can be. And it might have 6 or 7 different builders of that category in inner city, Brisbane, Sydney, Melbourne, Adelaide, across the country. And it compares between all of them, and it goes, you are sitting here compared to this. And like you can see actually a little bit of the report there. You can see exactly how you're going. You can see exactly how much other builders of your exact turnover are earning compared to you, what their wage is, for example. Like you might be on, I don't know, $80,000, $60,000 a year, and other builders might be on $120,000 a year on a 100K turnover. So having this report and this analysis, you're really able to drill down and see exactly where am I going with my business, and to like use that building example. If you're comparing with $800,000 turnover and a bunch of businesses, you'll be able to see effectively where you're going wrong. Maybe your cost of sales is up, for example. Future AI. I think I'm running out of time, so I'll be quick. Basically, AI is taking over large-scale data analysis and manual work within the accounting industry. So in the future, AI will be pushing towards accountants making decisions and advising their clients. Like you can already see simple tax returns already getting done with the help of AI and ATO data matching. So accountants need to be focused on moving away from manual tasks when possible, going away from doing the bookkeeping and making sure there's mistakes there, and focusing on becoming the advisor. And AI is helping us do that. We're able to change, like particularly against 15 years ago where we were back then. We're a lot faster. We can do jobs a lot faster than we were back then. And our jobs are now becoming reviewers rather than preparers. And that's a massive, massive difference at the moment. So I think I'm at the 45-minute mark. So I might open it up to questions from the audience. Any questions?
Isaac, Kishore has a question and it's there in this Q&A. Can you see that?
Oh, yes, I can. So I've been asked, there's a general assumption, especially after the introduction into accounting, where the role of accountant could become obsolete because of automation of most of the processes. What are your thoughts on that? That's a great question, a really good question. I actually asked this in an interview like 8 years ago, weirdly enough. But effectively, accountants aren't becoming obsolete. I think in a way, bookkeeping is becoming more and more obsolete. Bookkeepers are really, their roles are changing from the preparing to effectively just making sure the data is going in perfectly, I guess you could say. So accountants are changing from that kind of role, from going from the preparing aspect of it, making sure that things are getting entered in correctly, making sure bank recs are working, and now are focused on working with our clients. So if you look at accounts now, there's a much more focus on providing advice, tax planning pre-30 June, ad hoc work, advising whether this investment's more tax effective. So we're still there's plenty of work out there, but effectively our work's changing on just giving them a tax result at the end of the financial year, going, "Oh, you owe $10,000," to more about, "Oh, well, if you do this, it's going to make you this much money compared to doing this. This is actually more tax effective, and you make this much money." So it's yes, we're going to be losing on the order or on the menial task side of things, but let's face it. I don't think I've met an accountant who loves trawling through thousands of lines of transactions and trying to find why they're out by $50. I think everyone can agree, particularly accountants. Let's let the AI do that if we can. I certainly don't want to be spending my weekend doing that. I'd much prefer to be having meeting and actually providing value to our clients. So that's how I'd answer the question. Any other questions? Good question, Johan. Accountants may not be very tech savvy. How does accountants automate their tasks, or how do they reap the benefits of AI? It's a really good question. Accountants aren't that tech savvy. And in effect, you can see in the accounting industry where there's a massive opportunity for tech companies to take advantage of that. If they can utilize accounting skills to create tools that are good for accountants, you can see like Xero's got a gigantic market cap because that's effectively what they've done. And across the industry, I'm subscribed to a bunch of different tech products, tons of them, because I'm not that good at tech. Like I've done a presentation about accounting and AI. I can see how it benefits me. I can see how it benefits my clients. I can see how it benefits the firm. I can't do it. So I rely on tech companies who work with accountants to produce that kind of information, that type of software for us to use. So the way I'd answer that is accountants need to rely on tech companies to lead the way. And that means tech companies, there's a massive opportunity for producing accounting related software for the market. Because as well as that, accountants aren't very entrepreneurial in general. Most of them have very simple firms, and there's very few of them that expand outside of accounting or what they know. So I don't know, if you're a tech company, that's a very, very big potential there. Any other questions? Probably. So Johan said that they need to suggest more time educating themselves. Accountants have to spend. I think we've got to do 20 to 40 hours of CPD a year, depending on what you're involved in. So, like in effect, accountants have to be up to date on the tax legislation. They've got to be up to date to new trends in the industry, as well as tech. So the answer is accountants need to educate themselves, but there is a lot for accountants to do, and you can see how within the industry, it's the new softwares that take the market cap, the ones that are really easy to use, that generally go far. Tuaro said, "Hi, Zach, as accountants, how do we think we should prepare ourselves to adopt to the new changes in order to cope with fast-growing AI?" Really good questions. I guess similar to the previous question, we need to constantly be focused on what new technology is out there. Like I attend a lot of different software shows, I guess you could call them, and new product releases. I think like I'm part of a one called Change GPS, really good one for firms, and they've got a ton of different technology as part of their program offering. But you can see how tied in with all their program offering, they're delivering things like this type of software that either makes our lives easier as accountants or delivers more value to our clients that we can charge for. So I guess keeping in touch with the industry, making sure that you understand what's going on. I'm subscribed to something called Accounts Daily. It can be a bit dry at times, but it's an accountant magazine kind of company. So they produce reports about what's happening within the industry in Australia, which I find very interesting, and they include all that. So I guess just watching what's out there, looking at what's happening, and you can even see, like I mentioned before, the cash flow software. I started looking at that cash flow software about 5 years ago, and I think it's only really gotten to the point that I'd offer it to my clients in the last 6 to 12 months. Even a year and a half ago, I'd be offering Excel because it just wasn't there yet. So you just need to constantly be up to date, and even though something might not be ready now, it might be in the future. Excellent. Any other questions? Well, I think that's pretty much it for today. Looking at the attendance, I think it's moving towards we're moving towards a Q&A or session later with everyone else. So I think Radhika, do you want to do the next steps?
Thanks a lot, Isaac. So, for providing us with those insightful knowledge. So, it was really helpful. So, down the line, we could be using those accounting and AI, the things you said and everything. So, now we can all move to the Q&A session. There's a podcast by Gashan and Shantima using the return button. I would like everyone to join the main session now. Thanks a lot, Isaac.
Thank you.